Hey everybody, welcome to today's video. In today's video, we're going to go over 3 tips in which you can avoid getting stopped out of a good trade, right? We've all been there. I know that we've all been there. As a trader, I know you've been there. If you've been in the game for a minute, I'm sure that you have been stopped out of a trade and then the trade went exactly all the way until you take profit. And I know how it feels. So today, we're going to go over 3 tips in which you can actually apply in your trading as of today so that you can actually avoid getting stopped out unnecessarily out of potentially good winning trades. So if that sounds interesting to you, please do stick with us until the end. Don't forget to subscribe, turn on that bell notification, and share with your few friends that you believe they will find value in this video. All right. Now, first things first is that you actually need to be patient. It's crazy, but I know that's the first thing that you need to actually be in order to not get stopped out of a winning trade. You need to be patient until all your entry criteria are met. That's the whole thing. Because a lot of people sometimes like to take the trades before they actually all the criteria are met because they believe they might be left out. And that is actually a bad thing. That's actually a bad thing, right? Because at the end of the day, if your entry criteria are not met, there's a very high possibility that you'll get stopped out of the trade. So let's assume maybe, okay, right now we're in gold. We're having this gold setup. Let me look for a real fast example. So, okay. Okay, so let's say you are expecting to see prices fall from this potential resistance structure. You're anticipating to see prices fall from there, maybe to whatever structure, maybe down here, right? This is just for explanatory reason. This is for learning. This is for learning. So don't take it to die hard. Okay, so let's assume you're anticipating to see prices fall after they came back to this resistance structure, right? Now, mind you, this is just a random pick, so we're going to dive into it together. So let's assume prices reached here, and then you saw this kind of a rejection, and then this bullish structure forming, and then you had this bearish structure, right? So for instance, I'm going to use my trading strategy, obviously, because it's the one that I use. So for instance, for me, even though all the entry criteria are met here, like for instance, the confirmation candlestick and its own structure, I wouldn't take this trade. The reason for that is because look at the timing. The timing is about 2300 hours. That's about New York close time. Why would I take a trade when the New York session is about to close? That's not a good entry criteria. So that means all my entry criteria are met technically, but during to the time, it's not going to be a precise time for me to take the trade. And you can see prices just went down a bit and then came back up here on this market structure. So had I taken the trade maybe here, saying that, okay, I'm going to put my stop above the entry candlestick, my take profit somewhere down here, a perfect 1:8, I would have been stopped out before prices went all the way to hit my targets. Other than that, that's very bad. So the reason why you need to actually wait for entries to meet all your criteria is because you want to make sure that you take the perfect advantage of the trade that you're actually entering. So for instance, if we were patient and waited to take the trade here, we would have gotten a beautiful 1:4. It's 3.9 something, but obviously we could have made it a 4 like that, right? So you see, we would have gotten a beautiful 1:4 had we not forced the trade back here. Now, that's the first thing that you need to actually be focusing on. Always be patient for the perfect entry moment. Don't force trade. Don't be afraid that you'll be left out, and so that you can actually force trades, you can force entries. That's very bad. So for instance, here again, another example. I'm going to use gold today. I'm just going to be using gold. So for instance, here we see prices broke above this structure and then gave us a retest. Obviously, we are price action traders, so we are anticipate a break, retest, and then we anticipate a continuation, right? So let's assume here we were anticipating to see prices keep on pushing higher all the way until up here. But after prices broke and gave us a retest, we didn't get a confirmation candlestick here, right? These are inside candles. We don't take trades based off inside candles. We only take trades based off morning stars, evening stars, and engulfing candlesticks, right? So here, these are inside candlesticks. We wouldn't have taken the trade here, right? Now, if you are forcing a trade, very easily, you could have been stopped out of this trade here. Because if you took the trade here, aiming for these highs, very, very easily, you can see you would have been stopped out and prices at the end of the day would have come back and hit your take profit, right? But now let's fast forward. We can see here prices came back down here and then they formed this confirmation candlestick down here, one which we actually use, which is a morning star, right? This is a morning star. So had we used the morning star as our confirmation candlestick, let's see how prices would have played out. So obviously this was our entry, so our stops would have been below this candlestick right here. And you can see, had we waited for the perfect confirmation candlestick, our trade would have gone all the way until take profit, giving us a beautiful 1:16. It's insane, 1:16. So you can see the importance of being patient. Always wait until all your entry criteria are met. Not just technically, but also timing, because that's way important. That's very, very important in your trading as a trader. Okay, cool. Now, the second thing that you need to actually implement in your trading in order to not get stopped out is to always use a wide stop loss. A lot of people like to force trades, not force trades, but like to put their stop losses very tight, like 5 pips. Like, come on, bro, come on. 5 pips just so that you can have a higher risk to reward ratio? That's very risky. What are you doing? That's like pure gambling. You shouldn't be able to do that. Like, I'm not saying that all trades won't hit take profit, but obviously you're going to be losing a lot of trades in order to get that winner. So I find it's very hard, because imagine you're losing, let's say 10 trades just to win 2 trades. Psychologically, that's going to be damaging. At the end of the day, yes, you may be getting a high risk to reward. You may hitting your take profit 1:100 and you're like, yeah, I'm the man. But will you be able to withstand those 8 stop loss hits and still be sane to take the trades as they are without, your psychological, barriers stepping in? Because at the end of the day, trading is a psychological game. You want to make sure that if there's something you can do to avoid your psychology from starting to make you take like revenge trades, your psychology from trying to take trades that are based off fear of missing out, you want to make sure that you do that. Now, if you have a trading system that gives you high risk to reward ratios, but its win rate is very low, I feel like that's not a really good trading strategy, because at the end of the day, your psychology will always be taking the burns, So for me, I'd say just let it breathe. Give your stop loss room to breathe. Like for instance here, you see how I've placed it, right? I've placed it, the stop loss way below this doji candlestick right here, because I believe prices are very hard for them to come back down here. And if they do, it's most likely that prices will actually keep on going lower. You know what I mean? So at the end of the day, don't squeeze too tight your stop loss. If you take a trade, maybe based off a morning star, you can put your stop loss below that doji. If you're taking a trade based off engulfing candlestick, let's say it's something like that, you can put your stop loss below the entry candlestick and add in about 3 to 5 pips for damage, you know, because sometimes prices may come back down here. So you want to make sure that you give it enough room to breathe. At the end of the day, you're still going to be getting good, decent risk to reward ratios. Like, look at this one. This is a 1:6.7. This one is a 1:16. So at the end of the day, it doesn't matter the type of trades that you take, as long as this was a bounce of this market structure, guys, because some people may ask, why did you take this trade? It was a bounce of this structure. At the end of the day, you need to be focusing on the right criteria, and once the right criteria are met, give your trade room to breathe. Don't tighten your stop loss, because at the end of the day, it's your trade that's going to be hurt, and you don't want to mess that up, right? Now, the last reason, or the last thing that you guys need to be focusing on, is to always be taking trades at high volume times. I believe I already made a video about high volume sessions in the market, the high volume sessions in London and the high volume sessions in New York. If it's your first time hearing about this, high volume sessions are the times in which the market volumes are being pumped into the markets, right? So I'm going to be talking, I already made a separate video about that, so I'm not really going to be diving into detail about it, but I'm going to be talking just so that for the newbies, or for the people that are hearing about it for the first time, can get a clue. So the first, like in London session, it's the first and second hour of London kick-in. That's when you get the volume pump. In New York, it's the pre-New York hour, and the second and the 2 opening hours of New York. Those are the times in which volume is being pumped into the markets. Now, if you want to make sure that you want to maximize or minimize your chances of getting stopped out of a trade, you want to take trades during these volume times, because most likely, once you take a trade during these volume times, the volume is too big to get a reversal. Like, the volume is too heavy for the markets to actually reverse and go in the opposite direction. Okay, so let's take an example. Let's look at, this is gold, obviously. So let's look at the times in which you see the big candlesticks. We're going to start with the latest. What time is this? 1700 hours, my time frame. That's the second New York hour. This is another big candlestick. It's 1500 hours. This pre-New York hour, as I told you, right? Okay, let's see what time frame is this. 1500 hours pre-New York, 1600 hours, the first hour of New York. What about this one? 1500 hours pre-New York, the 1 hour before pre-New York. That's not a big candlestick. Let's see here. 1600 hours, first hour of New York, right? 1700 hours. This is a second hour of New York. What about this one? 1600 hours, the first hour of New York. What about this one? 1700 hours, the second hour of New York. This one came after 1600 hours, the first hour of New York. Like, all the big candlesticks in the markets are always in the same time. Like, that's the thing. Those are the times in which volume is being pumped into the market. So if you take your trades during those times, it's very easy for you to stay in a winning trade, even if the trade won't go all the way until take profit, but you'll be in deep blows enough for you to be break even, so that your capital won't be at risk. Other than that, you're just going to be taking trades during times that there's no volume. And when there's no volume in the market, that's when the market starts looking for liquidity. They start giving false breakouts, so that they can stop people out of their trades to generate enough volume to actually make the market move. And you don't want to be in that scenario. So always take trades during the high volume trading sessions times, right? Now, with that being said, guys, I appreciate you if you've watched the videos thus far. Thank you for your love. Thank you for always supporting this video. And with that being said, please do smash that like, as you'll help me reach more people, and it will actually encourage me to actually produce more content like these. So with that being said, I appreciate you all. Thank you for the love. Tomorrow we will be having a pre-New York, pre-market analysis for the coming week, live, obviously. So if you are still not yet in our Telegram group, the link is in the description. Be free to join so that you won't miss out the live session. And with that being said, guys, I appreciate you again. Turn on the bell notification so that you won't miss out on content whenever we release them, as we do so on a daily basis. Till next time, guys, I appreciate you all. Have a blessed weekend. Peace and love.